Good day. Ira Epstein of Linn & Associates with your metals market wrap-up for this Wednesday. And we are now at the 8th of July, 2020, and we're about 5:35 in the afternoon. So as you and I take a look at what's going on here, in the reopening of the market, we're a half hour already into it. We're up again in the stock indices. You're stalling at the upper Bollinger Band as expected in the gold market. Other base metals are moving to the upside. The dollar's been down, and we had a good rally in a number of currencies. They're giving back a little bit of that right now. Bonds and notes, very firm. If you read Bloomberg tonight, you might want to read, there's an opinion article there about why the Fed has to move to and I use the word has to move, to yield controls. Curve yield controls. You might want to take a look at that. I think it's fascinating reading, and I think the writer got a good point. I think it's the path that the Fed will probably head on if the economy starts faltering because of COVID-19, and all we see are more cases coming up. In case you don't know it, the Ivy League schools today canceled all sports for next year. Now, how far they're canceling it, is it the second semester? I don't know, but that's pretty serious. All right, so let's go to the metals and see what we've got. There was an article today, and I'm going to step over here as I just put this in my pocket. There was an important article today on a death cross. Now that's when the shorter term average, the 50-day, crosses over the 200-day. And that did take place in the gold market, and that is what? Bullish, very bullish, since it's a crossover, and that's what traders are looking at. In the gold, I can't argue that. The market's back to the best levels we've had in quite a while. The question, of course, is can it get up to the 1920 level that it was at before it fell down very hard? Don't have the answer for that. The swing line has still got a pattern of a lower low and a higher high. So as much as we've climbed to new highs, and we had uptrends here, we've went into this pause, and from there we've had another vertical price rise. That rise, if you take a look, it took place as we're over the 18-day average of closes, and it's run into resistance today at the upper Bollinger Band. I'm going to repeat what I tell you here. I think the first challenge of an upper Bollinger Band are where the pro in and out traders come out of positions. Then they look at that and they try to tie and see if they've got something in the way of a momentum index. I use the slow stochastic. They could use who knows what. But if it's locked in, they continue buying on the brakes, saying that until the momentum ends, this is what I think they do, the market is still locked into a nice uptrend. I can accept that. When you look at the gold-silver ratio, silver's starting to gain on the gold. The lower this number goes, the what? The less silver you need to buy an ounce of gold. This is how many ounces it takes to get an ounce of gold. And when we look at silver, the market had been sideways, and it's begun the process of trying to break out to the upside. You had the first move over the Bollinger Band, and now the question is the market going to get thrown back from it? At the same time, we have a market that is overbought. You have both numbers tonight, Thursday, for Thursday's trade up, but we don't want to look at that. We've got to go to Wednesday because we don't know where we're going to end up. Those numbers, you had a 79 reading. You cannot embed here. So it's just an overbought market that might be ready to launch out of the sideways action. And when that occurs, you initially do get overbought. So this all fits in. The question for me more likely is this market going to do what I call that gorilla glue thing? And that's where price starts marrying the upper Bollinger Band and keeps pushing on it without having successive days that get out of hand over it. That's what could be if you're really bullish. The one thing I've been saying now here since May, I think the base metals, if the economies of the world reopened, which they did, they're going to eventually need base metals. Base metals are going to be in demand. Silver is such a metal, in my opinion. Copper, same thing. Embedded reading, bull trend, not even giving the break, and this is what I call locking in. So let me explain what I say with the gorilla glue. Good ad for them. The market just gets glued to this. So you get a couple of days over, then you get back under the band so you're not getting excessive, then you come back and you keep fighting it, all the while riding the band higher. A very, very bullish situation that is often, the word is often, not always, but often accompanied by a locked-in bullish slow stochastic reading. You're trying to push out the platinum market. So are you getting the message here that Base metals, copper, silver, platinum, trying to move up. And I know you're going to tell me it's not a base metal, Ira. I get it. It's more expensive than the gold market. Is it? No, it's the palladium that is. But it's still a metal. Some people do consider it a precious metal. Jewelry is made out of platinum, right or wrong. So that's how that works. It's also about half the price of gold if you take a look at it. So trying to push that out, overbought, uptrend. I still say the pros came out at the upper Bollinger Band. They'll wait for buying opportunities if it embeds. Doesn't embed, it just overbought. And here's that massive sideways action still taking place in the palladium. The good news is we've recognized it. And we're staying what? We know to stay away from this because all you can do is get chopped apart in that. Let it break out one way or the other, then you try to catch it. Dollar. As you know, I've been a bear on the dollar. I started getting very bearish right through here. Actually, I got bearish a lot higher back here. And as it's falling down, I'm going to look for this market in this 96.37 level to try to find some support, the first challenge of the Bollinger Band. But I don't think it's going to go very far. I think it's just going to get stuck right there. So you put it all together, you try to come up with something that might work, might not work, and we have our guide to technical indicators. So let's assume you want to get familiar with everything I'm doing and brush up on these or learn these techniques. The volumes are about 20 pages a piece. They're full of explicits on it, the pictures. It tells you what's happening, how they work. It's all a primer. It's meant to be. If you tie it together with my charting course, you get a really neat education out of it. How do you get this? Just go to our website. Under free offers, you'll see that this is one of the many there. Take advantage of that. Click up here if you'd like to go and we'll take it from there. I know I have to do some metal reports, special ones shortly. I still don't have air conditioning in the home. It's just too hot for it. I will have it by Friday. They called today. All the parts are there now. So I will have that. And next week I'll start doing those reports for you as well. I'm Ira. You have a good day.